The economy is collapsing in slow motion. Hey, everybody, you're watching Bull Boom Bear Bust. My name is JJ, and today is Wednesday, July 6th. And I'm putting this one out a little bit later in the evening. You may not be watching it until the 7th, but either way, thanks for being here. Now, you see me here at the beach. This was today, but the wind noise was so bad that I had to go back and do what I'm doing right now, and that's doing a voice over because the wind noise just blocked out my audio, my voice. Couldn't even hear it in some areas. So I'm just going to go ahead and play the video, but with me doing the audio here, just with the voiceover, and that way you can actually hear what I'm saying instead of the wind noise. So first of all, this is Mission Beach, and this is the bay side of Mission Beach here in San Diego, the Pacific Ocean. Now, the other across the road, the other side of the camera view that you'll hear in a minute, that is the ocean side, not the city of Oceanside, but the side of Mission Beach that is the ocean with the waves coming in, not the actual bay. And we like to come to the bay area, or the bay side, not the bay area, the bay side, because there's no undertow. We don't have to worry about the kids, going under. There's Belmont Park. You can see the roller coaster. But this side of Mission Beach, this on the bay, is much more calm. And as you can see, it's not very crowded today at all. But over the 4th of July weekend, we saw just a massive influx. And to me, it didn't look any less crowded. We talk a lot on this channel about people running out of money. We know that debt levels are at all-time highs. We know that 7 out of 10 Americans are in the most debt that they've ever been in their entire life. We know that the savings rate now is plunged below pre-pandemic levels. So people are burning through their cash. They're burning through their savings. Now they're losing the lifeline of home equity in many cases. They still have equity, but with the prices stabilizing now, not going up as fast, people are more reluctant to borrow against their homes. So their lifeline is drying up. And we thought, we might see a little bit less people coming in here, less people coming in from out of town, but we saw tons of Arizona license plates. Now today, as you can see, not very crowded because today's Wednesday, but over the 4th of July weekend, it was packed. You could not find any parking. So we tried to save Wednesdays, weekdays anyways, take a day off and go to the beach on days like this instead of the weekend. You'll be much more able to find parking. And as you can see, there's plenty of room. You're not going to set your umbrella down or put your little camp down or cooler down next to somebody else who's going to be, obnoxious or worry about them invading your space, right? So it's a very nice time to go to the beach here in San Diego during the week. The weekends are nice too, but we prefer to go during the week. I just did a little jump down right there. And I was just going to show you the bay. There's some boats out there. You can see the Hilton back there in Mission Beach. But yes, people are still coming in. Tons of Arizona license plates coming in from Arizona. Probably the most out-of-state plate was Arizona, followed by Nevada, because those, of course, are very hot states to live in, and people love to come to the coast for their vacation, especially on a 3-day weekend like the 4th of July. So the point of all this is I'm not seeing gas prices really slow down travel very much. Now, I know air travel has been very chaotic, so it's causing a lot more people to travel in vehicles versus what they normally would have done traveling on an airplane because of all the shortages of pilots and all kinds of messes basically happening in the airline industry. And we covered this in a few previous videos where we talked about how the US consumer is going to consume and consume until they cannot consume anymore, until it's no longer possible to run up any more debt. And without some massive rescue programs, we are approaching that point where people are going to hit a brick wall because they're going to be maxed out. They won't have any more credit available. Now, one of the more common comments I see in this channel is, hey, JJ, when is the economic collapse? You said it's happening, this year, that year, the year after. It's happening right now in front of you. You just have to know what an economic collapse looks like. And yes, it's a slow motion collapse. Now, could something happen that triggers a tsunami? where everything freezes up and collapses overnight. Of course, something like that could happen. We call those black swan events. Think about the entire banking system going down, the electrical grid gets attacked or something between, maybe by one of these countries that are hostile to the U.S. I'm sure many of you know the U.S. has made a lot of enemies through the years. So things like that really would not surprise me at all. But until something like that happens, it's going to be more of a slow motion collapse. Now, we saw a pause. Basically, the pause button was hit in 2020. With the onset of the pandemic, we had all the rescue programs. We've talked about them here numerous times. I think most people know what happened, but just to recap, some of the big things were the foreclosure moratorium, the rental eviction moratorium, the freezing and pausing of many types of payments, including electric, utility bills, student loan payments, car loans, on top of course, all the rents and the mortgages. And it only took a month or two before people were in a very bad spot because of the paycheck to paycheck living situation for most people. These rescue programs had to occur, otherwise, you would have witnessed the biggest housing market crash and economic collapse that you would have ever seen that would have made 2008 look like a walk in the park. So that's what we refer to as the rescue programs. And just think about the stock market. We saw the biggest drop in the stock market. And let's just look at the Dow Jones here. Early 2020, the onset of the pandemic, we saw the steepest drop, the fastest and the steepest, most brutal drop in the stock market in history, worse than the Great Depression, followed by the fastest recovery in history. So the biggest drop in history, followed by the fastest recovery in history. And that was with the help of record-setting money creation. Record-setting money creation. And just enough was given out to the population, to the consumers, to prevent a tsunami of bankruptcies and defaults, of course, combined with all the other rescue programs that we talked about earlier. Of course, you know about all the rescue, the stimulus checks, but just enough to keep people from completely imploding financially, not enough to get people out of the poorhouse or make any life-changing difference. It just filled in the gap for a lot of the people that were out of work and lost their incomes during that time. Right? So most people didn't get wealthier during that time. They temporarily had more savings, but that's just because they stopped spending and they had the rescue programs for a period of time. So of course, savings increased during that time. But look where we're at now, a little over 2 years later since the onset of the initial health panic, and people have less savings now than they did pre-pandemic. People have a lot more debt, way more debt now than they did then, and we're still going further into all-time high territory for this debt. The inflation is still going on. Prices are not coming down for most goods and items. Look at automobiles, set another record. We just talked about that a couple reports ago. Rents still going up in most areas. Our previous report, we talked about how rents are coming down in some cities, which is pretty interesting. We're going to keep an eye on that. But overall, the rising prices are still around. The high cost of living is here to stay. So something is going to break. And will it be a collapse where everybody's going to wake up and the market's going to be down 90%? Well, maybe not. But the slow motion economic collapse is here, and we're in it right now. If you don't recognize it, you're going to look out your window, things are going to look fine, just like walking on the beach. Things look fine and normal and calm. But we know there's a lot of bad things under the surface that are lurking with this economy, the strength of the U.S. consumer, U.S. consumer being the driver of the economy via spending. So it's big problems headed our way. But knowledge is power. The more you know, the better you're going to be prepared, and you won't be blindsided by this when it really starts taking effect. And it's taking effect already. Just look at the debt levels. But we're talking about the late rents that are going to be coming up, the bankruptcies, the late auto payments, tons of auto subprime auto loans, Of course, mortgages are going to be in trouble with people that aren't able to sell their home now because their lifeline is gone. And the markets are also down and either steady or down. We're seeing some green days here and there, but we're still way down from the peak. And people's paper wealth, has vanished. And if that doesn't come back, if we don't see another whip up in the markets, then it's going to be faster of the onset here of this crisis. But it's happening. Don't get it twisted. Don't think that it's not happening. It's happening under the surface, and you just have to know where to look. Right here on this channel is where you can come back and get more of these types of updates and stay on top of everything financial, economic, and money. Thanks for being here. Talk to everybody very soon. Keep stacking. Bye for now. Peace.